I just don't know. What do I do?
Gosh, an LLC versus an Inc. I don't know.
Maybe I'll search the internet. Yeah, but this guy says this one thing. This other guy says another thing, and now I spent money for this course.
And now Will's saying I have a lot of options in structuring my business.
Oh man, I can't do this. I can't do this all by myself. I think I'm gonna pass out. Oh, that's a lot better. I feel way better. I can do this. I gotta shake it off. You know what I gotta do? I gotta pump it up. I need some music. We need some music. Advisorfi DJ, cue in the beat.
Okay, let's do this. Let's jump right into this section of the course called Business Structuring 101. Yes, you've made it to probably one of my favorite courses out of all the courses that I've done, because I think it's the one that's the most practical. It's a place where all your dreams come true, just like Willy Wonka promised.
Come with me and you'll be in a world of pure imagination.
That's right, it's my favorite movie of all time. But in this section of the course, we're going to try to tackle two things in Business Structuring 101. The first is, what is the difference between an LLC versus an Inc. versus a sole proprietorship unincorporated? And the second thing we're going to try to tackle is when you form either an LLC or an Inc., or if you stay sole proprietorship unincorporated, what are the different tax classifications for each one? So there really is a difference between business structuring and business tax classification. So what I want to try to do for everyone in this course is really lay a solid foundation so you have a good idea about how to incorporate or how to structure your business, and then what tax classification to choose. Now, I have a warning for you guys.
Danger, Will Robinson! Danger! No, Will Robinson!
If you're watching this section of the course and you've already incorporated, then there's pretty much nothing I can do to help you with the business structuring side of things. So if you've bought this course and you're watching this section of the course and you have already started an LLC in your state, or you've already started an Inc. in your state, more than likely, I'm going to suggest you stay right there, because at least the S corporation status can be elected in either an LLC versus an Inc. But if you bought this course and you're watching this section and you're an unincorporated sole proprietorship, then you have some opportunity to save some taxes. And this section of the course will help you understand your options as far as being sole proprietorship unincorporated. And then it's up to you to decide whether or not you want to go the LLC route versus the Inc. route. So we're going to try to keep this lively. We're going to try to break this down and make it happen, and make sure that you understand what you're getting yourself into, and making sure that you're laying a solid foundation for your business. So without further ado, let's go right into the material. Primarily going to be more educational. We're going to go over some slides. We're going to try to help you understand. I'm also going to include some other video clips that I've done with other companies in the space that help explain LLCs versus Incs. But all of that will be in this section. So let's dive right in. Okay, so let's just talk about the simplest tax structure there is, the sole proprietorship. Everyone knows exactly what this is, but they kind of don't know what it really entails, or really what the tax ramifications of a sole proprietorship is. Well, number one, it's the simplest structure around. Usually involves just one person. And what I mean by it's the simplest structure around is you don't have to do anything to form it. You just do business. You just go out and you say, hey, Will Lopez, I just want to pay you some money because you did some taxes for me. And I say, okay, well, that sounds great. Just write your check out to Will Lopez. And this is what I mean by it's the simplest structure. You don't have to reach out to your state or any other state to form the business. You don't even have to reach out to the Internal Revenue Service to get an EIN number. You just do business and you just go forward as normal. Now, what's interesting about the sole proprietorship is all the income and the expenses that you incur as freelancing, as a sole prop, gets recorded on your Schedule C, which is on your personal tax return. And the reason why this is a benefit for the sole prop status is because obviously it offsets any other incomes. So if you have a normal W-2 job and you have a little sole prop activity on the side, then any incomes or expenses that sole prop activity has on the side offset any other incomes that you have on the other side. So you get the immediate deduction or gratification of the deduction that offsets your taxes. and your taxable income as a taxpayer, which is a great thing. Number 3, it's extremely easy to maintain. Well, the reason why it's easy to maintain is you really don't have to do anything to form it. You don't have to do anything annually to keep it going. You just keep going. And if you want to stop your sole proprietorship activity, then you just stop, and that's the end of it. And so it really just comes down to simplicity, easy to maintain, and a lot of the profits and losses that you get from it flow down into your personal tax return, which means you get an immediate result of that business activity. Okay, so are there any disadvantages to owning a sole prop? Well, in my mind, there are a ton of disadvantages to owning a sole prop, depending on the kind of activity that you're doing. If you're doing something really light on the side, you're selling things on Etsy, you're selling used clothes or things on Amazon, I mean, that's really not a big concern in my mind. But if you're really doing some serious business and you're a sole prop, then there are some big disadvantages to staying a sole prop unincorporated. And here are a few. Number 1, you are personally responsible for all your company's liabilities. That's right. If you do business as a sole prop unincorporated, that means you're not under the cover of an LLC, you're not under the cover of an incorporation, then you are personally responsible for your company's liabilities. In the ordinary course of business, if you end up doing something that causes harm, damage to someone else or something else, you are personally liable. So if you have 401k plans that you have invested in, those become subject to the personal liability. If you own a house, if you own property, if you own real property, whatever you have personally as an individual, any of your personal assets, they go on the hook as far as being used to offset any kind of responsibility you may have financially in the event of a fallout as a sole proprietorship. Number 2, raising money is extremely difficult under a sole prop. And this makes sense. You're not really incorporated. You really don't have anything formal. You know, it doesn't look like you have something serious going on. So it's very, very hard to raise money as a sole proprietorship. Now, a lot of people say, well, it's easy because I can go get credit card debt under my social security number. I can go get loans underneath my name. Well, once again, you become personally responsible for the debt. You become personally responsible for those liabilities. So yeah, while that may be easy, once again, hard to raise money legitimately where you're not putting yourself at risk under a sole prop model. And then ultimately, as far as I'm concerned, you pay self-employment tax or SC tax on all your profits, no questions asked. That is, you have no ability to try to curb your personal tax obligations. You have no ability to try to limit the amount of Social Security and Medicare tax that you pay into the system, which is what self-employment tax is. That's self-employment tax is consisted of 2 taxes, Social Security tax and Medicare tax, which are the entitlement taxes that we all pay. But if you're a successful sole prop, not under the cover of an LLC or under the cover of an Inc., then all the profits of your sole proprietorship activity pay self-employment tax, no questions asked, without any opportunity of saving taxes at all. Okay, so let's talk tax classification for the sole proprietorship. It's fairly straightforward. If you are a unincorporated sole proprietorship, number 1, you can only be taxed as a sole proprietorship, and you have no ability to opt for any other kind of tax classification. Tax classifications such as partnership tax status, or C-Corp's tax status, or S-Corp tax status, or even non-for-profit tax status. If you are unincorporated and just a sole proprietorship, you can't do anything or elect otherwise besides sole prop tax classification. And that is how the IRS will treat all your profits and your losses as sole prop tax status. So it's really, really limited as to any other benefits or flexibilities in tax classification. So be fully aware of that. You can't do anything. It's one business structure, unincorporated sole proprietorship, and it's only one tax status that it can choose, which is by default a sole proprietorship tax status, which pretty much puts you in the worst tax spot possible. Okay, so far so good. All right, let's continue. Let's talk about the LLC corporate structure and the potential tax classification options that you have as an LLC. Okay, so an LLC stands for limited liability company. Funny enough, an LLC was actually first introduced to us about 40 years ago by the state of Wyoming. So Wyoming was the first state that brought out this concept of a limited liability company. But a limited liability company can be formed in any state. Any of the 50 continental states here in the United States, you can select any state and form an LLC in that state. So if you form an LLC in a different state than where you're doing business in, then whatever state it's formed in is called the domestic state. And if you have to do business in your state, that domestic company over there is considered a foreign company in your state. A little bit of a technicality there, but just kind of food for thought as you guys are kind of thinking about whether or not you're going to form an LLC in your state versus another state. In my opinion, I would say keep it simple. Form an LLC in your state, which keeps the process and the paperwork very, very simple and cost-effective administratively when you're trying to renew your applications or renew your business licenses year after year in your state. Now, LLCs can't be formed with the federal government. This is not an idea. LLCs are formed always at the state level. Incs are formed always at the state level. So it's a state-by-state thing. It's not a federal thing. Only at the federal level do you pay taxes and you get EIN numbers, so on and so forth. Number two, the benefit of an LLC, even if you're a sole prop or an S-Corp or a partnership, is that the members of the LLC aren't personally liable for the actions of the company. So if you were a sole prop, like I mentioned before, you have personal responsibility for the company's actions. But now that you're under the cover of an LLC, you as a member operating as a member, under the cover of an LLC, you're not personally liable for the risks or the actions of your own company, which is a great thing to have, especially if you're doing a lot of business and you're doing business in a lot of different areas. Number three, it's easy to start up and it's easy to maintain. It doesn't cost a lot to form an LLC in certain states. Generally, it ranges between, let's say, $50 to maybe $300, depending on what state you live in. So it's not very expensive to form. And when you form it, if it's just one person by default, you're a sole proprietorship. If there's more than two people, you're a partnership, so on and so forth. But we'll talk tax classification of the LLC, but very simple to start up, cost effective to maintain. So are there any disadvantages to an LLC? Well, there are. There's some disadvantages corporate structure wise, and there's some disadvantage tax classification wise. Number one, an LLC has limits. And what I mean by an LLC has limits is that a judge can rule that your LLC structure, your LLC business structure, doesn't protect your personal assets. So this is actually a concept called piercing the corporate veil. In theory, just because you're hiding underneath the cover of an LLC does not mean that your actions won't hold you personally liable. And generally, piercing the corporate veil means you've done something grossly negligent. So I'm not an attorney, so I'm not giving business advice, and a lot of this ranges from state to state. But theoretically, they do say that if you did something grossly negligent through your business that caused a massive liability to be incurred, a judge can rule that an LLC cannot protect your personal liabilities based on the gross negligence of what you've done. So if you've killed someone through your LLC somehow, a judge can say, well, you've killed someone, so then therefore we're going to pierce the corporate veil. We're going to go after your personal assets and hold you personally liable for that action. Number two, self-employment tax by default is a disadvantage to an LLC unless you opt out otherwise. So if you're one person that forms an LLC, by default, you're considered a sole proprietorship tax classification, which is a bad position to be in tax-wise. If you're more than one person, let's say two people or more forming an LLC, you're considered a partnership, which by default charges you self-employment tax, which is not the best place to be in. You can elect out of that, but by default, an LLC is taxed self-employment tax, which you can opt out of. And number three, which is more of a legal thing, if a member leaves the company, goes bankrupt, or dies, the LLC must be dissolved, and the remaining members are responsible for all the remaining debt and legal obligations and financial obligations necessary to terminate the business, which is a huge fallout in the LLC world, especially if you're forming partnerships. So if you're in a partnership, be very mindful that this is a ramification of the LLC. So if there's a member that leaves, dies, or goes bankrupt, the other members are basically left on the hook to cover for everything legal, financial, and debt-oriented of the remaining LLC. I would suggest that you speak with an attorney in your state to help you properly form a good operating agreement for your LLC to help you cover you and your other members and kind of hash this stuff out ahead of time, which is extremely crucial. Okay, so what are the tax classification options as an LLC when it comes to taxation? So we talked corporate structure, now let's talk taxation, where there are basically two by default that an LLC has. So if there's one person that starts an LLC, so if you're freelancing and you now want, let's say, the cover of an LLC for personal liability reasons, if you go out and you form an LLC in your state, if you're just one person or one member in that LLC, by default, you're considered a sole proprietorship, which opens you up once again still keeps you under the self-employment tax arena. But if there's two or more people that form an LLC, so let's say you found someone that you want to go into business with, but you don't want to do it underneath your own social security numbers, you end up forming a partnership, and then that partnership is covered by an LLC. By default, the federal government taxes your partnership as partnership tax status, which also still opens you up to self-employment tax. Now, what's good about the LLC is even though by default, if one person owns it, you're a sole prop, and two or more people own it, you're a partnership, you have the ability to opt out of it. You have the ability to opt out into 3 other areas of tax classification. Number 1, you can opt into a C-Corp. So there are LLCs taxed as a C-Corp. A C-Corp is also called double taxation corporation. It's meant for specific purposes. It's meant for, let's say, if you want to offer 2 kinds of stock, if you want to go public, if you want to have unlimited shareholders, so on and so forth. The C-Corp is very popular for that. It can opt in for S-Corporation status, which is what this boot camp and this course really is trying to train you in, which means you can't have more than 100 owners. It's the best tax classification status when it comes to saving money and taxes because the net income of the business does not pay self-employment tax on all the profits, so you end up avoiding self-employment tax as an S-Corp at the bottom line. And number 3, you have the ability to opt in for non-for-profits. There are some non-for-profits that are LLCs that have elected non-for-profit status, but obviously this course is not really covering that, but that is an option that you can do underneath the LLC. Yes. So now at this point, I actually want to take a few minutes to show you a video that I did with Gusto Payroll that kind of highlights the difference between LLC versus S-Corp. So there is a lot of confusion as to what an LLC really is. And many times people think that LLC is something different from an S-Corp, or if they want an S-Corp, then they have to shut down an LLC. And what I'm trying to say is an LLC is a corporate structure and an S-Corporation is a tax classification. And the S-Corporation goes underneath the LLC when it comes to tax classification. So over the next few minutes, I want you to watch this video, and this should explain the difference between an LLC and an S-Corp.
LLC, S-Corp, what's the difference? How do I tell the difference between an LLC taxed as a sole proprietorship and an LLC taxed as an S-Corporation? Think of an LLC like a luxury car, a really nice one. Inside the luxury car, well, you have different kinds of interiors. You have cloth and you have leather. Well, LLCs operate the same way. Inside an LLC, well, you can be taxed as a sole proprietorship. I think about that as the cloth interior. Inside the LLC taxed as an S-Corporation, I think of that as the leather. Now the cloth interior, it's easier to maintain, really easy to clean, you don't have to do much. Same thing happens inside an LLC when it's taxed as a sole proprietorship. It's easy to maintain, you don't have to file a separate tax return, you just include it in your Schedule C. But when your LLC is taxed as an S-Corporation, well, things get a little more complicated. It actually has to file a separate tax return. And guess what? You have to run payroll for yourself. That's where Gusto comes in. One thing to be aware of is when you start your LLC, when it's taxed as a sole proprietorship, you don't have to do anything. It's actually the default structure from the Internal Revenue Service. But when you want an S-Corporation, you actually have to fill out some paperwork and elect for it. So it's not something that you get right away. It's like the luxury car. When you buy it from the manufacturer, you get the cloth interior. If you want the nice one, you got to upgrade to the leather. That's the S-Corporation. When you're an LLC taxed as a sole proprietorship, you just take money out of your business and it's called a distribution. With LLCs taxed as an S-Corporation, you can also take distributions, but another way you can pay yourself as an LLC taxed as an S-Corporation is through payroll. LLC taxed as a sole proprietorship, only one way to pay yourself, distributions. LLC taxed as an S-Corporation, well, there's 2 ways. One payroll, the other distributions. One of the reasons why LLC owners elect S-Corporation status is to save money on taxes. Well, how is that possible? So if you're a small business owner of an LLC taxed as a sole proprietorship or an LLC taxed as an S-Corporation, you're going to pay Social Security and Medicare tax. But the biggest difference is when you're an LLC taxed as a sole proprietorship, the Social Security and Medicare tax is on all the net income. Whereas when you're an LLC taxed as an S-Corporation, it's only on payroll wages, no matter how big your net income is.
Okay, so hopefully that answered some of the questions that you have in your mind about the difference between an LLC and an LLC taxed as an S corporation. An LLC is simply a corporate structure, just like an Inc. corporation is a corporate structure, and an S corporation is a tax classification that corporate structure can make. So thanks to Gusto for letting me do that video with them, and you guys got the benefit from that because they've not released it yet. But in this section of the course, that's just a bonus for you guys to understand really the difference between the two. Okay, so let's dive into the last area of this section of the course. We're going to talk Inc. corporations, or INCs, or Incs as they're known. We're going to talk about the pros and cons to them and what you should be aware of as far as an Inc. So we've talked sole proprietorship unincorporated, we've talked LLC, limited liability company, and then now we're going to talk about the third most common, which is incorporations. Now, Incs are just like LLCs. They're formed at the state level. It's not formed at the federal level. And once again, with any legal structure or corporate structure, corporations themselves or incorporations has its own advantages and disadvantages. Incorporations allow you to cover personal liability, so you wouldn't be held personally liable for the debts or the financial obligations of the incorporation. But incorporations, just like LLCs, don't avoid the piercing the corporate veil. So if you do something grossly negligent inside an incorporation, a judge can still deem and pierce the corporate veil and go after you personally for that grossly negligent act. Now, number two, one of the biggest advantages of an Inc. versus an LLC is the ability to attract investors. Incs are very well known for attracting investor money, whether it be Series A, B, or C funding, angel investors, stock investments, things of this sort. And the reason why is because an incorporation really has, by default, is taxed as a C corporation, which allows you to issue two kinds of stock, common stock and preferred stock. And so that allows you to kind of negotiate and entice investors. So Incs are really well known for this. So if this is something that you're looking to do, you'll most likely want to form an Inc. versus an LLC, because an Inc. is just more attractive when it comes to getting investors to invest in your business. Number three, it actually has a power structure, a good corporate power management structure. And what do I mean by this? Well, the management structure can be really diverse. It could be from directors, presidents, vice presidents, officers, and shareholders. Incs have a very, very diverse corporate structure that you can lay out in what they call the corporate bylaws, and the bylaws would determine the corporate structure. So this is another big advantage of the Inc. over the LLC, whereas the LLC, all the owners are basically known as members, and that's about it. There is no structure. It's not like you have a president member or a vice president member, it's just members. Whereas in corporations, they have structure: president, vice president, directors, shareholders, so on and so forth. And number four, another big advantage is stock and stock options for employees. So if you're building out a big business and you're trying to do something nice for yourself and you have employees that are going along for the ride and if you want to give them incentives for pouring their lives into your business, you can extend out to your employees stock options, which in corporations can give you the ability to do stock options, whether it be common stock options, preferred stock options. And so Incs really have a good flavor when it comes to stock and stock options for employees. Now, are there any disadvantages to the Inc? Well, no doubt. There's always disadvantages to every corporate structure. But number one, the time and cost to incorporate. Now, incorporations, just like LLCs, will cost you money at the state level, generally between maybe $100 and $500. But the reason why there's a lot more involvement in a C Corp or an incorporation is because it gets very formal very quickly. When you form an incorporation, the default tax status is called C Corporation, so you will have to immediately file a separate C Corp tax return. You'll immediately have to run payroll for yourself if you're being profitable. So there's a lot more time and administrative effort in administering an incorporation. Number two, you have to follow kind of the corporate formalities in an incorporation. So you have to do things like create bylaws, which determines the structure and the way the company works. You have to keep minutes for yourself. There's a lot of corporate formalities that have to be observed in an incorporation being taxed as a C Corp or any other kind of corp to ensure that the corporation is operating as a separate entity independent of the business owners. And basically these steps kind of include, let's say, holding regular meetings of the directors, keeping records of corporate activity, maintaining the corporate ongoings, financial independence, so on and so forth. If you have board members, then you have to keep board minutes. This is something that happens a lot on the non-for-profit side, that you have board meetings and director meetings, and all of this needs to be formalized by way of minutes and documenting all those kind of meetings together. So the formality of corporate structure really increases under an incorporation. And number three, one of the biggest disadvantages, at least on the tax side, is profits from traditional corporations may be double taxed. And the reason why it would be double taxed is a incorporation taxed as a C Corp by default has its own corporate tax rate bracket. So the company's profits would be taxed at a federal tax bracket. And then if the profits are distributed to the shareholders by way of dividends, then the shareholders themselves must pay a dividend tax on that profit. So that's why it's called a double tax. That is, the profit gets taxed and then the dividends gets taxed again. Okay, so what are the tax classification options for Incs? Well, no matter how many people form an Inc., one or more, it really doesn't matter. By default, the Internal Revenue Service selects the C Corp tax classification, and that's by default. And the C Corp tax classification is a double tax company. Once again, the profits get taxed, and if the profits get distributed to the shareholders, then the shareholders pay tax on those dividends that got distributed. So it's a double tax corporation. But an incorporation does have the ability to opt out of C Corp status into two other statuses. Number one, S corporation status, which is what this boot camp is really about. And then number two, non-for-profit tax status. So if you're trying to form a non-for-profit, you'll want to go with an incorporation all day long, and then you'll fill out all the IRS documentation in order to get 501c3 status or 501c something status. If you form an incorporation and you want to elect S-Corp status, then you would fill out Form 2553 and have your Inc. elect S-Corp status. If you don't want anything to change in your incorporation and you want to stay as a C-Corp, then you don't do anything. You go forward as business as usual, and by default, your incorporation will be taxed as a C corporation. Okay, we did it. We completed Business Structuring 101. If you were here trying to get to how to complete Form 2553 when you're late or when you're not late, sorry, this is the wrong section, but thanks for hanging in there, though. I appreciate it. This was Business Structuring 101, and so I went over the three basic business structures that are out there, and then the tax classification for each business structure. So hopefully that answered your question. If you've not formed a business yet, then you'll want to consider LLC versus Inc. If you've already formed a business and you're either an LLC or you're an Inc., then just watch the other videos and have that LLC or Inc. elect S corporation status, whether you're late or not late, using Form 2553. So if you have any questions about the coursework, be sure to leave comments down below or leave comments inside the coursework or touch base with our support team, which you can do at support@advisorfi.com, and we'll try to get back to you as soon as we can. Okay, we'll see you guys at the next section. Keep flexing those brain muscles. That's right, baby. Keep flexing those muscles. You're going to get out of here an S-Corp guru, and we can't wait to see you on the other side. Hey there, cowboy and cowgirl. If you guys like what you see, click on that subscribe button down below and check out this video over here and that playlist down there. And we'll see you guys on the next video. Yeehaw!